Hi, welcome to McBoss Capital channel. This is Michael here. Today is June 15. We are doing market recap for the week ending June 14 of 2024. So I'm going to start with where the market is. I feel like it's a little bit extended. So most of the holdings I have tightened the stop. That in a way I'm not doing offensive selling in the sense that I'm just selling anything, but I already did that, starting a few weeks ago, and so right now it's not much left on my portfolio that for swing trading purpose. So yeah, if you guys still holding anything, watch out for the market being extended. Nasdaq right now is about 7.5% above its 50-day line. That raised the risk of a pullback. Also Nasdaq and S&P are on an 8-week rally. So if we jump to that chart right here, let's run Nasdaq here, and we'll look at the weekly chart first, just to get a sense where we're at. So right here we have the recent pullback in April, and we have bounced since then. Now we are 8 weeks into it, so roughly 2 months. The previous run you can see from November last year to up to almost end of March was 21 weeks up, and then the year before was 19 weeks up. So we are in this pretty strong bull cycle right now. So we're getting traction. The problem is, and this is, sorry, I shouldn't talk about the problem yet, but let's just jump to S&P. Very similar chart. So it's on the 8-week move as well. Let's go to daily very quickly here. We had a gap up on Wednesday due to the CPI data right here. And then you can see it's holding like pretty tight right now. It didn't want to come back to the 10-day green line. So that's really good news. If I go back to Nasdaq, very similar action, even stronger. We're on the 5-day run right now. Also a gap up, holding tight near new highs. So right now Nasdaq is holding strong, and same as S&P. So that's where it's at. But the decliners, again, this is based on Friday. Decliners led advances nearly 3-to-1 on both NYSE and Nasdaq. So that's quite not that good of a news, right? Like, why is the market breadth continue to weaken? And so let's just jump to the accumulation distribution level here is C for S&P. D plus for Nasdaq, so it's a little bit weaker. And then we have New York Stock Exchange Advance decline line, and you can see right here we are near the bottom of recent trend for S&P, despite S&P making new highs. Then we also have Nasdaq also making new highs, and we have again 2,500 stocks going down versus 934 going up. So you can see we have an all-time pretty much a multi-year low according to IBD. So this is very negative. So I would be very cautious of where the market is heading, in this coming short term here. So something to watch out for. Again, Dow Jones right now it is below the 50-day moving average. So we go to Dow Jones chart. Again, Dow Jones and Russell, which we'll see in a second, is getting weaker and weaker. Right here you have, this recent bounce here. It failed, came back all the way down here. Now this bounce is much weaker this time, and you see this 2 days here that's kind of sneak up against the moving averages, but it couldn't go. It just couldn't. To me, that is a very negative signal. And now we're living, kind of below all the moving averages now for many days, like 4 days almost. So it's starting to weaken. Now the good thing is the 200 day is coming up pretty fast right here. So even if it does fall further, it might, it probably undercut this low. It will shake a lot of people out. There might be some fear, volatility index might jump if this happens, and then we might see if there's a bounce here. So that's Dow right now. So yeah, like I said, very weak. Russell also losing ground on the 50-day line. So let's just jump to that. And here's the Russell chart is very ugly to even read. I'll just draw the big trend here, and this is what it looks like. And right here. Now, what's the big story here? The big story is this 2000 level, which we come back once again right here, and there's the 2100 level right here, and which has fell many times now, right? But you know, the biggest problem is this right here. So let me refresh this. Here's the problem in the recent trading. Look at how volatile this is right here. So you can see this big range comes back, hit a new low, comes back, hit a new low, and then it looks like it's weakening significantly right here. Then it bounced again, 1 day big bounce. This was Wednesday. Again, on the CPI data in the morning, it jumped like 3% that day, but look where it ends, back down here. And then look at what's happened the next 2 days, hit a new low again. This is very negative in my opinion. And the reason why this is negative is also because Russell small caps, they really depend on the interest rate, right? Because a lot of them are on borrowed money. And so when you look at the 10-year yield, what has happened this last 2 weeks? It has fallen quite a bit. You can see it found rejected right here on the 50-day line after bouncing from here. And it has made new low. So now we are on a very low yield, 4.2%. And that's because of the inflation data is much better than expected. And so if inflation is getting better and interest rates supposed to go lower, why are the small caps acting this poorly? Something to be aware of. Again, we already broke this downtrend, this trend line right here, and we broke that. And now you can see the action right here looks very negative after the Fed. So whenever you break a long-term downtrend line, look at this. Look at this. It just got rejected right at the line right here. So beware of this. This is not looking good. This is a very steep slope 10-day moving average line. This is the channel line right now. I don't know how far this will go, but if it does come down hard, expect it to come as far as this and see what it does there. But there's going to be many levels of testing here, you see, because those are the previous support levels. So just pay attention. This is one reason why I'm getting more and more negative on my stocks. If you want to watch the other video that I'll do, just talk about my top 50 stock list. You can see a lot of the leaders have started to fall, especially in the smaller cap area. So so on Friday, growth stocks will also hit. The Innovator IBD 50 ETF also like slight 1.3%. So here we have this nice cup, and then we have this high handle right here, which is looks a little bit ugly, but it did find support at the 50-day line, and then it bounced. Then it pulled back once more right here and make a new high this week. At least a closing high, and right now it's pulling back. So you can see the new highs have more volume here, and then on Friday a little bit of pullback again back to the 10-day. This time it looked a little bit more better than this one right here, so maybe it'll find support this time. Again, this is the IBD 50 stocks. If you subscribe to them, you'll be able to see what those lists is. But in general, it looks healthy so far. It is still in somewhat in the uptrend. So we have this original bounce. Now we have this uptrend that looks somewhat like this. So it still have higher lows and then higher highs. Again, so this uptrend looks intact. And so hopefully we'll see how that goes. So stocks end higher this week amid benevolent inflation readings, which cheer investors even though the Federal Reserve then lowered its outlook on interest rate cut this year. Pretty much instead of 2 cuts, now they're only down to 1. At least that's what they're projecting. And then on Friday, we have the Michigan survey of consumers' sentiment. It fell unexpectedly in June. There were expectations for a lift. So that's what happened on Friday. And so despite tame inflation reading, the Dow Jones and Russell still fell below the 50-day line. So so that's kind of weird, right? That's what we were talking about, why Dow and Russell is much weaker, which is despite lower inflation. So just to recap, on Wednesday we have the CPI came out for May. It was flat on the month, and it's up 3.4%. Core prices were also in line. Let me show you the chart. So what I'm showing here is from the IBD newspaper weekly. Core CPI inflation hits 3-year low. So right here, the core CPI, you can see it's been steadily coming down, and it looks really good in terms of a yearly change rate. The May consumer price index was flat. So you can see right here you have two colors, the regular CPI and then the core CPI. So in May is actually at 0%, which is a good thing. Like monthly change is 0%. The core CPI is at 0.2%. So both were below wheels, which is good. So yeah, this is a good number. That's why Wednesday we saw a big bounce on the market. And then we have services excluding energy also dropping. So let me just come back to Nasdaq one more time. Once again, we have this gap up here on Wednesday right there. The other thing I don't know if I actually showed it earlier is this 50 days right here, and this is where Nasdaq is. So it's quite a big gap for that. So that's why we mean by extended, because the last time we see that extension was around here, and you see there's pullbacks happening, right? As soon as it get a little bit too extended, like there's another one here. Now those one doesn't look as wide as this right here. So that's why, that's why there's some sort of expectation that a pullback might happen. So just beware of that. Same thing right here. This is, that's the extension is not as far away from the 50-day. So in general, index do usually not go too far away from the 50-day moving average. So that's why, like, we gotta be more cautious here how far this is extended. Traditionally in the past it has gone as far as even 10 or 11%, but those are usually quite extreme levels. So it could happen this time, like, for example, like we're seeing the chips just continue to lead the Nasdaq. And if we go to like actually QQQ, which is the top 100 stocks in Nasdaq, you can see it's even more like obvious that it just continue to move up. So I just want to highlight that extension there. So yeah, I already kind of talked about this, but really right after the CPI report, the Fed only forecast only one rate cut this year. So that's also very interesting. Even after that meeting and announcement, the market didn't really give back much gains. So that's a good sign. We can go look at the intraday chart as well. Thursday the PPI came out in the morning. Also were unchanged. So that's also a good thing that this is kind of setting up for a rate cut in September. And then the initial jobless claims jumped to a pretty high level on Thursday morning. So those are also pointing to that, hey, the economy is weakening, and so the Fed can start to cut rates. So just look at the intraday chart quickly here. So again, there's two stories that's happening. We have Nasdaq and S&P, and this is the Nasdaq chart, but the S&P look very similar. We have the gap up in the morning because of the CPI news. Then we have the Fed, kind of released their report on Wednesday noon, and the reaction was pretty good. Despite them even, like I said, only having one rate cut this year. That's what they project. But it did give back some at the end of the day, right? As you can see, the two bars down. This is a 15-minute interval. Then in Thursday morning, we see this gap right here. That's the PPI report and the jobless claims. So again, both kind of helped the market push higher. It did give back some, but it still closed okay. No, not that weak. So, and then Friday was more of a mediocre day for Nasdaq. Now let's look at the other extreme. Russell and the Dow, which are the two weaker ones in terms of index. Again, we have the Wednesday strong bounce in the morning because of the CPI data. You can see, like I said, it was huge. It was 3%. Now, the part that is negative to me is, like, you can see here, within a very short time, like 1 hour and 30 minutes or whatever, it start to drop, right? And then you see this big bar right here. This is where the Fed announcement came out and say, hey, we're only going to cut 1 this year instead of 2. And so that was the big drop. And then it really never recovered. Like, it tries to bounce, but it never really recovered, and it just kept going down. And then even on Thursday morning, with the jobless claims number and the PPI report that is better than what most people are expecting, but still it continued to go down. This is the part that kind of a little bit scary here, right? And then finally, on Friday morning, when it opens, it gapped down. You can see that gap down right here, which is quite significant. And that's also number one thing. Then the second thing is it undercut, recent lows right here. And it never recovered, as you can see right here. So that's also another negative. So, like I said, I'm not sure if this trend will continue. Like, they're both diverging quite different. So here's a comparison chart, just looking at recent weeks, like, the last couple of weeks here. So again, I'm just gonna, you see this is the trend of Russell going down, and then this is the trend of Nasdaq going up. So that's the divergence we are talking about. It's quite significant. Generally, bull market, they run together. And you can even see, if you go back, you see that the divergence wasn't there before. So why is it happening now? That's a very big question, and I can't answer that. But I don't know. Something has to give, and I don't know who eventually will give in. So next week we have the Empire State Manufacturing Survey due Monday. Wednesday we have it's not going to open because of Juneteenth holiday. Housing starts will come out on Thursday, and the U.S. service manufacturing PMI data comes out on Friday. There's also quite a few Fed representatives speaking during the week, and then you will have the retail U.S. sales for May, which comes out as well. Not sure which day it is. So we'll also have the earnings news coming from some home builders like KBH. We have some heavy construction like JBL, and then Olive Garden restaurant. So we're just gonna jump to the equal weight just to get a sense. Again, this also symbolized kind of show the picture of where the breadth is heading. So equal weight meaning doesn't matter how big the company is in terms of weight, market cap, or even the price. It's going to be weighted equally. And so there we have it. Like, it is kind of under the 50-day right now, so it's not a good sign. Friday we fell back below it. Now it has came down below before, but this is the first time it's very clear it's below 50-day. Like right here was also clear. So again, this is now the second time it fell below it. So that's very interesting, right? And then we'll go to equal weight Nasdaq. Again, remember, Nasdaq is the stronger one. And S&P is actually not too bad, but again, in this case, it's below 50-day. But Nasdaq actually, again, it fell here, but then it bounced back, and it's above 50-day, right? So this still look okay. So we already look at small cap, which is kind of Russell, which is quite weak. Let's look at the mid cap. Here's the ETF for mid cap. Very similar pattern, right? You see it keep making new lows as well. So So that's the problem. And then the highs are also lower, and again twice it fell. So something to be aware of. So as we saw earlier already, the 10-year treasury plunged, all the way to 4.21%, the lowest point since late March. But yet the Russell is not, performing good. The other thing is the U.S. crude oil jumped 3.9% a barrel to this week, and so we look at that right here. So this is U.S. oil fund, and we have a big bounce. It looks pretty strong, but now we're coming back to the resistance level on this channel line. So we'll see whether it can, surpass this. So far it hasn't. You can see right here, 3 days, it just couldn't go above that level. We'll see what happens after. So this is the US dollar bull. It had, so this is the market trend right here. So when we go back since November last, and it kind of, formed this, like, coming from the lows, and then, and then we have this pattern built, and now it's coming out. So this is very interesting, right? Like, we had this really flat base here, and now it kind of came out on Friday. It did pull back a little bit, but it still looked pretty strong. Again, we have a very, very volatile Wednesday and Thursday for the dollar, but right now, Friday it kind of gap up. So something to watch out for, that, kind of interesting that the US dollar is getting a lot stronger now again. So we talked about this last week as well. The gold, form a base. It couldn't break out. Now it's on a downtrend. And, this week you can see it's still not able to come back very strong. Thursday was also, pushed back down. Friday it did come back. So now we're just sitting at the 10-day line. So we'll see what happens. Then we have copper. So copper, in general, strong economy tend to have higher prices. Right now, this is a very sharp downtrend. That's the weird part about this. So I'm not sure if this is signifying something bad for the economy, but it's definitely broken this 50-day trend line. It's now staying under it for many days now, like 6 sessions. So, like, it could go as far back as this. So we'll see what happens. Look at the CME futures right here for the Fed funds rate. Right now in July, there's no change. And then September, there's a higher chance now, 61% of a rate cut. So, and then there's no change here in November. And market also pricing in another change in December now to 475. So right now the market expectation is 2 cuts. But again, the Fed did reiterate that their projection is 1 cut. So we'll see what happens. We're going to look at all the sectors right now, the spider sectors. Right now, you can see XLK, the technology sector, pretty strong uptrend right now. Again, the Nasdaq is doing well, and so is this index here. The communications, this one is weakening. You can see it's pulling back. So that's not good. Retail, also pulling back, also not good. Consumer discretionary, it was doing okay until Friday. Maybe this is just a minor pullback. We'll see. Consumer staples also pulling back. So as you see, most of them are pulling back right now. Industrial sector, probably the more weaker one. Right now, wow, look at Friday. It went pretty much to a new low, and then before it bounced back. So, but in general, we are in a downtrend. So we'll see how it reacts here next week around this downtrend line, whether it can bounce back to this 50-day here or not. But right now you can see industrial is quite weak. The material sector also doing not too well as well, also on a downtrend. Utilities again continue to weaken as well. Right now the 50 days catching up. We'll see what happens there. The healthcare sector also pulled back this little bit this week, but generally is holding on. But yeah, it's holding on right here, so we'll see what happened there. Energy continued to weaken despite oil price going up this week, so that's interesting. Financials also weakening again. So, you know, a lot of the industrial, financials, materials, again, that side of the story, which are very cyclical in some sense, are not doing well, despite interest rate is going down. And, you know, the long-term use, you know, so, and then we only have really the technology that is kind of, you know, still holding up the market. Communication service, as we just saw, also weakening. Retails are also not that strong at all. So I don't know what's holding this market index so high. So that's why I said, you know, despite the indexes at this level, it is really extended. So we're gonna look at the Mag 7, the Magnificent 7 stocks. Before we do that, let's just look at the semiconductor group. This is a very healthy chart right now. 10-day slope is look like this. A little bit extended, you can see here. You know, kind of a little bit far from the 10-day moving average. So don't be surprised if it pull back and then before it goes higher. So the semiconductor group did really well this week. And if you look at Nvidia, also very strong. Again, this is the 10-day line. Again, you can see it a little bit extended right now. It has 33% gain from here, so it looks really good. Then we're gonna look at IGV, which is the software group, and yeah, I will talk more about this in the other stocks video. With like some of the software stocks seems to be coming back up a little bit, but they are gonna get challenged at their longer term moving average, like the 50-day and the 200-day. So watch that video. But here you can see this, it fell right here. Now it's coming back again. Even this one, I was surprised how many days, 4 or 5 days. Now it didn't make much progress, and then it came back down, right? So hopefully this time it will move, right, rather than just kind of not move again, or it just goes straight back down. So the software group is showing a little bit of sign of improvement. Look at this volume bars here, right? So it looks like some people, and the duration is significant. This consolidation, it started around February. So a lot of software stocks in the enterprise area have consolidated or, you know, corrected. Some of them quite significant again. So maybe this is time for them to start coming back up. So this is a very healthy sign. So again, we have chips leading the market. Now if software comes back, does that mean the index is going to go higher? And then how about the divergence story? The market is a mess right now in a way, from my point of view. So it's a very narrow breath, and then if software does get stronger, will chips start to fall? Like, I don't know. So this is very interesting questions. So let's just jump to the other big 7 stocks. Microsoft is the next one. Now you can see Microsoft is at new high right here this week. Break out from this base, pull back, and now it has climbed up. And this is the slope of the 10-day, very strong. Again, Microsoft, again, I think the big story this week, we have Microsoft at 3.2 trillion cap. We have Nvidia also hitting new high at 3.2 trillion cap. And, you know, the other stock that did really well this week as well is Apple. Broke out from a long consolidation right here. And look at this powerful move on huge volume, right? Again, the AI story is really helping Apple right now. And again, another stock that is at 3.2 trillion. So those 3 stocks are fighting for, you know, to become #1 in terms of market cap. So this is also very healthy just to see the daily chart in Apple. It did pull back a little bit, but that looks okay. Volume also subside. So yeah, very healthy. And then we go to Google. So Google is consolidating here as well, like a 3-week type pattern. Looks really good. Near new high. So right here is the high around 180. Right now just sitting right here. Looks okay. Nothing wrong with that. Still holding above those, you know, short-term moving average. We have Amazon. Amazon looks a little bit weaker. It pulled back to the 50-day. It's a little bit further away from the new high, but it's not that far either, right? So it's doing okay. Again, not as strong as the other ones, but it's okay. Meta also pulled back. Look how tight this pullback is. It's just, I can't even see, like it's just like a dot, like so small. So it's still above the short-term moving average. Also looks healthy, not far from the high. So all these mega caps are looking pretty healthy. And then we have Tesla with all the package news for Elon Musk. Not sure what's going to happen there, but the market likes the news that they might approve it this time. Blah blah blah. I don't know, what's good or bad. I just know this market is reacting to it. This flat base, again, I mean, generally flat base is a good thing, and the tighter the base, the even better. And look at the volume here. I can't remember who pointed this out. Like the volume has really subsided. I think Jim Roppel pointed this out. But and then on the upside, volume is really strong, right? So I mean, even before this base was formed, you can see the upside volume was really strong, and then the selling volume really subside. So this is a good sign for Tesla. Maybe all the selling has been done. I don't know. This is a long-term downtrend now, but I don't know. I don't think the up, like if we go to weekly chart, like we still have this long-term downtrend as well, right? Like right here, you see. So, and then you can see here, like in a way they got rejected at the upper level. So, but right now at least they found a floor right now at the 50 days. So as long as it doesn't break this 50-day, and this get narrower and narrower, the gap between the 50-day and the trend line, maybe it'll push up. We'll see what happens there. The other big stock that also did well this week is Netflix. Netflix again got to new high this week. If we look at the pattern here, we have this nice cup base, and it's been sitting there for a while. It's trying many times. It's really tight. Look at the volume starting to like really go down right here. And then on Friday, look at that volume when it came out. Again, this is a good sign. Looks healthy. So one breakout idea, Chipotle. You can see right here, this pattern right here. It's very tight pattern. It's consolidated for 4 or 5 weeks here, and then on Thursday it broke out on high volume, and again you see the blue volume is pretty high, and then the red volume has kind of subsided right here, and then look how tight the next day is, Friday. It doesn't want to give up much. Let's look at the weekly chart just to see where it's at. So it has been on a long-term uptrend, and right now it just came out again. Very tight pattern identified, 3-week tight area right here. Looks really good. Another possible breakout idea here is ELF. Again, you can see the weekly chart here. It's been pretty much on a long-term uptrend, and then it built a base. Again, another uptrend, and then built a base. So right now, we have this nice cup with handle pattern, and we just start trying to break out this handle right now. Let's go to daily chart. So here you go. You see this cup, and then you see this handle pattern. This first one is also a handle pattern, but it fell on that one. So because it came out and then it fell back to make a lower low. Now this time it came out again, make a newer, I don't know if it's a newer high, but pretty close. But now Friday pull back. Look at that volume, the lowest in a long time. So the natural move here would be to rebound off the 10-day and move higher. That could be your signal right here. So we just look at some of the stronger stocks, but GE, which has been doing really well this year, went up right here. You can see a really strong run, and then started to build a base here. But look at what it's doing right now. It got rejected here on the 50-day line and fell below it, and now on Friday, look at it, didn't even try to come back up. So it looks like this is starting to weaken. You can see the RS line relative strength is starting to drop really fast. So just beware, because like I said, and when you look at my other stock video, which we'll discuss more, a lot of stocks that had come up, the problem is that they're so far away from the 200-day. The 50-day and 200-day is so far, or even in some cases the where it is, and the 50-day, the red line, also very far. So if they do fall below those those moving averages, they can go to the next moving average, and those gaps are so big. Are you willing to sit through those to hold that stock and give up that 20-30% possible movement there? That's something based on your own strategy, but I'm just saying those are things to watch for. One last thing I want to look at is the home builders. Again, we're gonna have another home builder reporting early next week. It's kind of been built again. We have this run, same thing. It's been building this base now for almost 2 months, I think, and it's trying to come back again, right? You can see right here, it's trying to come back. It did reverse on Friday again, but the action has been weaker than I would like. And I don't like how there's lots of selling on the red volume as well. And then we have, even on this day that is strong volume, it's actually a reversal day, so I wouldn't even count that as accumulation day. So the home builders are just continue to see weaker strength here relatively, so something to be aware of. Thank you for watching this video today. Please like and subscribe, and try to follow on the other stocks trading video that will touch base on the top 50 stocks I follow as well. Thank you.